Okay, let's dive into this. Welcome to The Explainer, everyone. Today, we are unpacking what happens when cutting-edge AI infrastructure slams right into extreme crypto market momentum. We're looking at the Billions Network, and of course, its native token, BIL. So let's get right into it and figure out exactly what's driving this massive hype and what the actual reality looks like underneath it all.
So to really understand the buzz here, you've got to look at this number, 43%. In mid-May 2026, the BIL token went absolutely parabolic, jumping a staggering 43% in just a single 24-hour window, pushing the price all the way up into the 8-cent region. Naturally, explosive action like that instantly caught the attention of traders globally. But price action alone, it never tells the whole story. Now, what's really interesting about this slide is the glaring anomaly we're seeing. Look on the left. You've got a 24-hour trading volume blowing past $354 million. But over on the right, the total market cap is sitting at just $235 million. Having your trading volume vastly outpace your entire market cap is a massive, massive signal. It tells us this isn't just organic long-term holding. This is aggressive, speculative rotation and pure momentum trading. People are flipping this token at lightning speed.
Section 1. The Crisis of Digital Trust.
Before we get completely lost in all that financial frenzy, we have to ask the big question. Why does this tech actually exist? Well, the answer is right here. Our internet is basically going through a massive crisis of authenticity. Did you know that over 51% of online interactions today aren't even human? It's wild. And that is driving an estimated $30 billion in fraud losses every single year. Between the deepfakes, the super sophisticated scams, and endless bot armies, we have a huge trust gap. We desperately need a verifiable infrastructure layer to prove what's real and what isn't without handing over all our private data in the process. And that brings us to a really revolutionary concept, KYA, or Know Your Agent. Now, we're all pretty familiar with KYC for humans, right? Well, KYA is a framework built specifically for AI agents. It lets them securely prove their identity, where they came from, and what rules they operate under. And the absolute best part? They can do all of this without exposing their highly sensitive internal models or prompt weights. That's the exact gap the Billions Network is trying to bridge, building this unified layer of human verification and AI accountability for the modern internet. Section 2. Identity for Humans and AI, the Deep Trust Framework. And this brilliantly illustrates how they actually pull it off. Check out this user experience. You don't need to buy any clunky proprietary hardware or do some sci-fi invasive biometric eye scan to prove you're a real person. Users can securely verify their humanity right through a sleek mobile app using just their everyday smartphone and a standard government ID. It's all built around this verify once, prove anywhere philosophy. It literally makes onboarding as frictionless as it gets. All right, let's peek under the hood at the actual Billions Network architecture. To pull this off on a global scale, the project runs on a Polygon CDK-based Layer 2, which is then securely anchored right to the Ethereum mainnet. That setup is absolutely crucial. It gives them the massive scalability they need for millions of daily verifications, guarantees user privacy using zero-knowledge proofs, and enables seamless cross-chain identity checks. It's like a perfectly optimized engine. Okay, but how does this actually play out in the real world? Well, the core use cases are incredibly practical. First up, you have Sybil-resistant airdrops. This essentially stops multi-wallet farming bots dead in their tracks so they can't steal crypto rewards. Then there's reusable KYC and AML compliance. Imagine never having to resubmit your passport to 20 different apps ever again. It also allows for totally private, secure age verification. And of course, it enables those accountable AI agents we just talked about. The main takeaway here? You get to prove facts about yourself to a verifier without ever exposing the raw underlying data. Section 3. Tokenomics and the ecosystem, utility of the BIL token. So what does the BIL token actually do, and how is its fixed supply of 10 billion tokens chopped up? If we break down the supply, we see a very community-first approach. 40% goes straight to the community, 32% to the foundation, 20% to contributors, 6% to investors, and 2% is set aside for a creators program. Now, while the community gets the biggest slice on paper, you really need to keep in mind that only about 24% of those total tokens were actually circulating at the token generation event. So the crucial point is this major supply risk hovering right over the market as we speak. With 76% of the total supply still locked up, the token concentration is just incredibly high. On top of that, on-chain data has literally caught team-linked wallets depositing millions of dollars worth of BIL into exchanges like BitGet. Combine that activity with the big upcoming token unlocks scheduled for May 19th, and you're looking at some very real bearish risks here. Historically, insider unlocks and huge exchange deposits are the classic setup for a sharp sell-off. That said, the token isn't just a vehicle for wild speculation, it actually has real economic utility baked in. The staking principles show that testers, everyday users, and even those AI agents literally have to stake BIL tokens. They do this to build reputation, unlock premium features, and earn a cut of the verification fees. Basically, staking acts as a giant collateral system. It perfectly aligns everyone's financial incentives so that they act in a trustworthy way on the network.
Section 4. Market hype versus reality. Market sentiment analysis.
Now, if you look at the technical indicators, things are running extremely hot. Like melt your face off hot. The 7-day Relative Strength Index, or RSI, just recently hit 90.7. For anyone unfamiliar, an RSI over 70 is widely considered overbought. Hitting 90.7, that is extreme. Historically speaking, when you hit technical extremes like this, it's basically a massive flashing warning sign of an impending sharp price correction. The momentum is undeniably powerful, but man, it is dangerously stretched right now. And honestly, that exact tension is perfectly mirrored in community discussions, like the ones we're tracking on Binance Square. It's wild. Over on the left, you've got these stark bearish warnings, traders calling this a textbook pump and dump and pleading with retail buyers not to become exit liquidity for the early whales. But then on the right, the bullish claims are shouting just as loud. They're predicting a supercycle, pointing to elite relative strength, and claiming real enterprise adoption with rumored partnerships involving absolute giants like HSBC and Sentient. Look, we are definitely not here to pick a side, but this deep, passionate divide in market sentiment is undeniable. Fueling this massive fire are some major market catalysts. Remember that staggering 24-hour volume we looked at earlier? A lot of that is being driven by brand new futures listings on heavy-hitting exchanges like Binance and Kraken. And here's the kicker. They're offering up to 20x leverage on perpetual contracts. This is pouring a massive wave of fresh speculative capital and extreme liquidity straight into the token. But of course, that also heavily amplifies leverage-driven volatility, bringing a very real risk of cascading liquidations if the market turns. So, that brings us to the ultimate question. Is the Billions Network truly building the internet's essential new trust layer for both humans and AI? Or is the BIL token just the crypto market's latest high-leverage trap? There's no doubt the underlying technology is tackling a massive $30 billion problem. But at the exact same time, this extreme speculation and high leverage introduce some undeniable risks. It's an incredibly fascinating intersection of vital tech innovation and raw market psychology. Thank you so much for joining me for this explainer, and as always, keep your eyes on the data.